time to move on and welcome on board the CFO at Tech Wabag. Mr. Seetharaman is joining us to talk to us about their earnings. Hi, Mr. Seetharaman. Good to be speaking with you. Well, your revenue growth was modest at just around 8%, but there's a good jump in the profitability. It's up almost 34%. Explain to us what led to that, and going forward into FY25, do you expect the pace of revenue execution to improve and at least see a double-digit growth for FY25?
Good morning to you and good morning to all your viewers. Thank you very much for having us on your show. Yes, the revenue expansion in Q3 has started. We have seen about 8-9% of growth year over year. And this is largely on the back of the Chennai desal project and the Pagla STP in Bangladesh picking up pace. And also all other projects have been doing well. So there is growth that we see, and this we see as a good momentum going into Q4 as well as into the next year. We have a good order book, which has a very nice mix of EPC as well as O&M projects, giving us good revenue visibility and revenue expansion, not just in Q3 and Q4, but also into the next year. And the profitability or the margin improvements have been largely driven by the way we have executed our strategy Vriddhi, which is focusing on EP projects, international projects, industrial projects, which all focus on better revenues, more importantly, better margins and better cash. And this we have demonstrated over the last many quarters, where we have consistently maintained double-digit margins and a net cash positive position.
Taken, but could you define it for us? What do you mean by good growth and the visibility that you have? What would it envisage for FY25 in terms of numbers? And also the margins, yes, have come to the levels of 14% now. Do you expect further upside? Because in the 9 months gone by, your revenue has been close to around 2,000 crore rupees. What could that number be in FY25?
We have not been giving a guidance as such, but what I want to tell you is that both our order book and our order pipeline is extremely robust. We are seeing strong tailwinds, especially in the international geographies, mainly in Middle East and Africa, which is our growth engine. And we told you last time that we are following over $1 billion of projects, high technology projects, which are both in desalination, recycle, which is key to our growth. And this international exposure helps us keep the momentum on. So the growth will certainly be good for the next year as well as this quarter. And contextually, I think it is also important to see that we are reducing our exposure in the European geographies, and this is how we divested 2 European subsidiaries in the last year. So even on a year-over-year basis between last year and current year, you should see that the revenues are not flowing from these 2 subsidiaries in the current year, but it is there in the last year. So margins are improving, revenue is improving, order book is robust, order pipeline is extremely strong, and we are extremely bullish about this sector. So is inevitable.
Mr. Seetharaman, morning. Yes, given that you're very bullish then on the order inflow, let's discuss that a little more in greater detail. In terms of your rest of the world contribution, that is going to continue to remain higher. You were talking about Europe as well being a critical geography that you will continue to explore growth in. What kind of orders are you expecting, given that the order book stands at about 11,900 crores currently? Where do you see it headed?
Order book obviously will grow. You know, the whole world is looking at water security, water recycle, desalination, and this sector is only gaining traction every day. Just to clarify, Europe is not our core market. We focus on emerging economies, and here we look at Middle East, Africa, South Asia, India to be the key geographies for us where we will have growth. Middle East, I've already explained the amount of bullishness we have, large, complex technology jobs. You've already seen one of the jobs coming through in this quarter, where we are treating a complex cocktail of effluents for esteemed clients like Miahona and Aramco. Likewise, there are various other international geographies which helps us change gears and keep the momentum on, and no single dependence on a geography is there. So the order book has, I would leave it to history. You have seen our order book continuously go up from sub 10,000 to 10,000 to 12,000. So this is bound to grow. We have demonstrated earlier as well. And a key propeller here will be our international presence, especially Middle East and Africa being our growth engine.
But just talking about the Middle East operations, while it is a revenue growth area for you, sir, there are companies which are actually facing headwinds with respect to working capital there, not getting the payments and dues on time. Is there anything that you are also witnessing?
I would say as an industry and an organization, we are only having tailwinds here. Our sector has to grow, is growing, and will grow. And this is where we employ our strategy well. We look at EP projects, which gives us both control over time, cash, and better margins. We only focus on projects which gives us payment security, either through a sovereign funding or through a federal government guarantee or through a multilateral funding or through a confirmed letter of credit. So for us, payment security is paramount. And today, if you see, a very, very good part of our order book is all payment secured. We are okay to compromise on margins, but we are not okay to compromise on the payment security. So for us, as I said, Middle East is a very, very bullish market. We are seeing good opportunities, and our strategy combined with the sector is going to surely give us strong, robust growth in that sector.
Okay, fair enough. Just one quick word. I know you spoke about a promising order book. Do you have any target in mind, a number?
I think I've given you a outlook on the Middle East geography and where we are following over $1 billion of orders. So I'm sure it is going to grow. We are not giving out a guidance, but we are giving out a guidance that we are going to grow.
Right, thanks so much then for taking time out. Good to have you on board.